Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me Anuj and Sonia, and from all of us here, Independence Day greetings to everyone who is watching. For the moment, it looks like it's independence from pessimism, independence from bearishness. That's what the Asian screen is telling us, a decent shade of green. Well, it's very tempting to say that we should have expected this. If Europe and the world could take Greece in its stride and Italy in its stride, why would Europe not take the exposure to Lira in its stride? It was all of $194 billion. So we should have expected perhaps, but it's always wiser to be, it's easier to be wise after the event. But there are telltale signals. It's not just the green on the screen. It's green on the equity screen. It's the fact that yen and dollar have receded somewhat. These are usually safe havens, and they become expensive when the world is going through a bout of fear. Today, dollar index has receded a bit, 96.16 compared to 96.49 yesterday, and the dollar yen at 110.80 compared to, 110.30 that it went to yesterday. So both the currencies are showing a little bit of weakness. But I think for India, there is a much bigger domestic trigger which we have to take on board. The July inflation number, you shouldn't even call it an inflation number. I think I should call it a disinflation number. At 4.17, more importantly, food inflation, 1.3%, 1.37, I think is going to be a very big trigger for yields as expectations of rate hike get phased out. So I think we have a big thing going for an Independence Day trigger.
Okay, yes, Independence Day. I mean, I was looking at some of the pictures of the preparations at Red Fort, and it makes you so, you feel so patriotic, right? Reminds you of your childhood with all the flag hoisting tomorrow, etc. But morning Lata, morning Anuj. Anuj, of course we have macro triggers, positive inflation, etc. But what about the setup itself? The markets, the US markets are down for the 4th day running. Emerging markets have been under a bit of a cloud. You get a sense that, these global triggers could put a lid on the market today, or could we break out of that?
Morning, Sonia. Of course, first things first, happy Independence Day to everyone. I think, you spoke about childhood. It reminds you of, it reminds me how, every passing year you're getting older and older,
And now your children are going for flag hoisting.
Exactly. But look, first I'll just present a basic picture which is very interesting. This month there's a bit of a problem with emerging markets, currency and everything included. MSCI emerging market is down 4.2%. That's a big decline. Asia ex Japan is also down 2.8%. For emerging markets, you could argue it's other markets, but Asia ex Japan is down 2.8%. India is down 1.6%. MSCI India, that takes into account the dollar equation as well. For me, as of now, the base case is the way the market has fallen violently from the top is that we have made a near-term peak at 11,500, probably for this series. That's my base case. The overall uptrend is intact as long as the Nifty is above 11,250, which is a 20-day moving average, also the previous low. So the risk-reward equation is that if you make a move towards there, perhaps you should try a buy trade. If it works out fine. If it doesn't, so be it. The other point is, and the corporate banks have shown sign of a halt in the rally. We discussed it yesterday as well, the likes of SBI, Axis, ICICI. And this month, Nifty IT is up 2% and Bank Nifty is now flat. So once again, some money is moved into IT, and that's obvious because of the way currency has moved. Short covering is possible today only if the Bank Nifty crosses yesterday's high of 27,912 and trades above that. Similarly, for the Nifty, yesterday's high of 11,406 will act as first resistance. So let us see how things move. I think the market will give us a verdict. The way we fell yesterday and closed at the lowest point is telling me that at higher level there would be a propensity to sell as well in this market, and at higher level yesterday's high we will see some resistance as well.
And considering we have a holiday tomorrow,
considering we have a truncated week, and of course next week also, by the way, is truncated week, so there's a good chance that rallies also get sold into, even if at lower level there is some support.
My sense is that the rupee market could be a little important today as well. Yesterday it was the harbinger of the weakness in the equity markets. Today, I think at 69.93, people will want to stop buying the dollar. At least some will look to sell the dollar. It was very important that the Reserve Bank did not come and support. It didn't come in the way of those who wanted to exit. And hence, my sense is today there will be a natural zeal, especially because this last 93, at least 10 paise came in the last 1 hour of trading. And therefore, there will be some taking away, and the dollar could be sold at higher levels. And dollar is weak globally. So the rupee market could give us a cue of positivity, which is again good for banks, and well, people may take profit in IT.
Okay, but let's talk a little more about this macro data, right? I mean, the 9-month low for retail inflation. You were talking about how largely it's food inflation led, but even core inflation has fallen. You think that would change the dynamics in any way?
Well, the food disinflation is more important. I'll tell you why the core disinflation is not so important, because it's a base effect. With each passing month, you will see core inflation not going to that 6.39, 6.35 mark, because it picks up a lot, the base picks up a lot, and therefore, optically, you will feel that core inflation is falling. I don't think the Reserve Bank will be fooled by that too much. But food disinflation is very serious. Now, even if you add an MSP to it, will food prices rise so much is a question we have to ask economists. And many of them thought that while they're not revising their inflation forecasts, clearly that food disinflation was something that hit them rather seriously. We will have to see whether it persists even after the MSP comes into being. Then, people will seriously take off bets of another rate hike. At the moment, I think the October rate hike is definitely, something the market will price out. One, there is nothing in the data for 3 back-to-back rate hikes. Okay. And then now the August number, which will come before the Reserve Bank goes to the monetary policy meeting end September, they will only have the August number with them. The August inflation is going to be below 4, again because of the base effect. So that is, when you go into the monetary policy with a sub 4% inflation number, to have a third back-to-back rate hike is really something that cannot be justified. And therefore, the market will price in that hike is out. If the disinflation continues, then I think they will start pricing out any rate hike. And that'll take some doing. For the moment, I think the bond yields will go closer from yesterday 7.8 to 8.3, closer to 7.7. And that would be it. Then they will have to take the oil prices and other things on a day-on-day basis.
Okay, in fact, we have many, market voices telling us about their view on inflation. So let's kickstart the show on that note. Let's take a look at what our wise experts have to say as we head into trade this morning. Neelkant Mishra of Credit Suisse says withdrawal of unprecedented levels of monetary accommodation is expected to cause outflows of capital from emerging markets. He says, as per the IMF, a large part of the flows to emerging markets over the last decade was due to Fed quantitative easing or Fed policy expectations. He says the impact of a reversal of these on India, however, is to be the least after China, and thus meaningful rupee-specific weakness and volatility appears unlikely. Neelkant adds, while they are worried about the rupee since the beginning of the year, they were worried since the beginning of the year, over the past few months their concerns have reduced, with gross inbound FDI flows picking up and capital flight in the form of net jewellery imports declining.
Okay, let's get you some money market views. Bhaskar Panda of HDFC Bank says the USD INR pair got roiled yesterday as the Turkish rout influenced all emerging markets, including China. He says the rupee traded at lifetime lows against USD, and the trend is going to remain similar given early morning Asia signs. Also says the dollar index is moving to a 13-month high, and that's not going to help INR in the short term. He expects another volatile day for the USD INR pair in a range of 69.85 to 70.15. Okay, so
and
he's still bearish. Yeah.
Okay, on the bond market, he says in July, Indian consumer prices rose to 4.17%, which is below expectations, a positive surprise. However, he adds core inflation still remains high. He says Indian yields also rallied yesterday, and he expects the 10-year benchmark bond yield to remain within the 7.8 to 7.85% range for the trading day.
Okay,
right,
over to Nigel for the world view.
Well, the US markets ended in the red in yesterday's trading session. The Dow was down more than 120 points odd. Remember, the Dow was on a bit of a losing streak. Fourth straight session that we're seeing that the Dow ended in the red. What's really rattling investors out there is the Turkish crisis, and that's what's playing on the mind of investors. In fact, in yesterday's trading session, the biggest losers on the Dow were a couple of financials, Goldman Sachs as well as JP Morgan. Both of them were down close to around 1.5%. Shifting focus to the European markets then, they ended more or less flattish with a bit of a negative bias in yesterday's trading session. All the three indices were lower. But we're talking about Turkey, so the Turkish index should come up for you. That was down close to around 2.5%. The Turkish Lira, though, has pulled back a tad bit from the recent lows, but still hovering below that 7-odd mark. Investors, really, they're concerned out there that the president has a lot of control on the economy. And the second factor is the sanctions that U.S. is talking about on imposing Turkey. So those are the two concerns. Brent crude prices was drifting towards the $72 per mark. Now, that's bounced up a tad bit early this morning, while the dollar index rock solid at around 96.3. Asian markets, though, more or less mixed today. The Nikkei is a big outperformer. That's bounced back, sitting with a gain of around 1%. But otherwise, the Chinese market continues to struggle, and the SGX Nifty is indicating a more or less flattish start. Back to you.
Okay, thanks a lot for that. So a flattish start, but a tad bit of green is what you're seeing on the SGX Nifty right now. But let's get you some more opinion. Ruchir Sharma, the head of emerging markets and chief global strategist at Morgan Stanley, has said that the fall in the Turkish lira was waiting to happen. Talking to CNBC, Ruchir Sharma added that the real fear of global currencies falling will come true only if the Chinese yuan starts losing its track. Listen in.
Turkey's been doing everything wrong that you can find in the economic textbook. It's been relying too much on foreign capital, huge current account deficits, massive amounts of debt, which this country took. And then, of course, you have on top of that a political leadership that is following a very unorthodox policy. So I think that this has possibly been the most obvious crisis that I can remember in emerging markets. This has been in the make for a very long period of time, but you're now getting to the absolute key point here, that why has it happened just now? And I think that this goes back to the fact that every time we have higher interest rates in the US and we get a stronger dollar, that combination has always been a lethal combination for weak assets across the world. So the Turkish currency in particular, I was looking back at it, 1994, 2001, 2008, every time the Turkish currency has taken a bath because it's always been most exposed to foreign funding.
Okay, that's about the Turkish lira crisis, contagion fears across the globe. But for our own markets, we've been fairly resilient, you'd have to say. On the other side of the break, we'll come back with CNBC TV18's top 10 list of stocks to watch for the trading day. Hi, welcome back to Bazaar Morning Call. Well, if you look at the Asian markets, the Japanese markets are leading the advances. I think most of Asia has shrugged off the recent uncertainty over the Turkish crisis. In fact, across China, there's a barrage of economic data that will come out later in the day. Look at that, most markets either in the green or inching towards the green line. Our research team is here to give you the list of top 10 stocks to watch as we head into trade this morning. So let's welcome all of them bright and early in their Independence Day attire. Hi guys, morning. Anuj, what are you looking at?
Sonia, just before that, I think there's a bit of a dichotomy. Developed markets doing well again. Japan is up, for example, while Hang Seng is down. So just would want to keep an eye on that.
And also
equation.
the Chinese yuan is now 6.88, which is weaker than where it was yesterday.
Exactly.
Yesterday it was 6.87.
Yeah. So
all may not be well.
Exactly. So 0.6% down is what you have on Hang Seng. So just keep an eye. Two stocks, one on the green side, one on the red side. GAIL, I think it's coming out of a bit of a congestion post results and at the cusp of negating a double top. It's been there twice and receded from there. So let's see very strong delivery buying post results. And I think the weakest stock in the market right now is Cadila Healthcare. Yesterday also, it's very close to 52-week lows, and it's technically it's broken down. The stock's price is less than 20-day moving average, which is less than 50-day, and which is less than 200-day moving average. So classical weak stock, a stock that people sell on all rallies. So that's something I'll watch out for.
Okay, but of course the stock of the morning is likely to be Tata Steel. The big boy announced numbers yesterday. Better than expected, you would say, Nigel?
Well, yes, Lata, if you factor in a couple of adjustments, then those numbers looked a bit better than what we were estimating. Yes, in the last 1 month from the recent lows, the stock has jumped up by close to around 15%. But what could be encouraging and why it could open up in the green is because yesterday it ended at the low point of the day. There was a bit of a whisper that those numbers will not be very, very good. For Tata Steel, we're looking at the geographic performance. So first up, if you look at the India operations, the EBITDA came in at sub 5,200 crores. That was a bit of a miss by close to around 300 crores, 200 to around 300 crores odd. And even in terms of an EBITDA per ton, came in at around 17,250 rupees per ton. So that as well appeared as a bit of a miss. But the management says there was a one-off of around 400 crores. So if you adjust for that, then the numbers, in fact, looked quite good. Remember, the net debt in the books did increase because they've consolidated Bhushan Steel. But Europe, no worries, $100 per ton, much better than what the street was working with. And smaller parts, Southeast Asia as well, did fairly decently.
Okay, yes, and a lot of brokerages actually raising their target prices. Jefferies has raised it to 602 versus 586 earlier. They say that the India business did much better than expected. But let's move on. Sonal is also with us. She'll tell us how Oil India and Tata Chemicals did this time around. Sonal?
Well, I'll start with Oil India, Sonia. Good set of numbers, operationally very strong. EBITDA went up by 75% at 1,400 crores versus our poll of 1,300 crores. Profits, however, were down quarter on quarter. That is because the other income component was low, and also because of higher tax rates. Net realizations in terms of crude were highest ever at $72 per barrel. But of course, that was because the crude prices were up YOY and on a sequential basis. Jefferies is a buy with a target price of 310 rupees. But they say that EPS momentum might go down if there is some subsidy, if the realizations go up above the $60 per barrel level. Tata Chemicals also good set of numbers. Revenue went up by 13%. But operationally, it was weak because of higher costs. The power and fuel expenses went up, and so did the material costs. However, management says that the UK operations, they are back on track after the decline that it saw in the last quarter. Also, the Magadi operations have showed improved realizations. Let's see how the stock reacts to that.
What do you think it will react?
I think it should be positive.
Okay. Thanks for bringing some saffron into the screen, Sonal. We had white and green. We were waiting for a saffron. Abhishek, Repco and DHFL on your radar.
Both are on the opposite ends, despite being the fact that they operate in the same segment, that is housing finance sector. So for Diwan Housing, it is a strong performance across parameters. Disbursement growth of 65% YOY leads to the highest ever AUM growth at 37 plus on a YOY basis. The net interest margin jumped to 3.44%. It has been in the range of 3 to 305 basis points. The PAT came in at 435 crore versus Motilal estimate of 329 crore. The company is looking to raise about 4,000 crore by way of equity issuance. We'll be seeing closely for that. Repco Home Finance, despite the fact that disbursement was strong, 28-29%, loan growth remained weak due to Tamil Nadu, and NII growth at 7% is the lowest ever for the NBFC. Back to you.
Hey, how do you mean due to Tamil Nadu?
There is a lag effect in terms of the loan growth over there. Loan growth in Tamil Nadu state alone, which constitutes a huge part of the book, has grown only at 6 to 7% YOY.
Okay. I thought there was some big Tamil factor.
Okay, Pat comes the reply, right? But retail inflation is at a 9-month low. That's the big talking point for the trading day. Lata, what would the impact be, if anything at all?
Well, there'll be more farm distress, but that's separate because it's serious food disinflation. But separately, I think for the moment there'll be cheer on the bond markets. I mean, now I'm a little taken aback by the way in which the yuan has fallen further. But I think that'll still not spoil the fun in the bond market. You're going to see a bit of a recovery of yesterday's shorting of bonds. And as yields go towards the 7.7, as the yields start falling, I think it'll be positive for Bank Nifty and it'll be positive for the NBFCs as well.
Okay.
That's some stocks to watch out for. Yesterday, there was a big decline in PSU Bank, especially in the last hour. Anisha, what about the other results?
Well, thank you, Anuj, for that. I'll start with Apex Foods, wherein the numbers have come in better than expectation because the profit grew around 21%. Remember, peers like Avanti Feeds as well as Waterbase did not perform too well, so this comes as a positive surprise. Moving on to Ashoka Buildcon, wherein there was no surprise when it comes to execution. In fact, it was a bit tepid. The revenue came 100 crores below our expectation, and the profit was a tad bit better only because of higher other income. Lastly, on Lemon Tree, well, it is the operational performance that actually improved for the company. The revenue is up around 18%. The company reported a profit versus a loss last year, and even the occupancy details have gone up. So I expect that one to stay in the green. Back to you.
Thanks for that. And there are some changes in the MSCI India Index. Nimesh, what should we have on our radar?
Yes, Lata. So not major changes, but in terms of large cap indices, Page indices moved from the small cap to the large cap, so that stock will be in the green. Vakrangi has been deleted from the large cap to the small cap index. Anyway, the stock was down 20% yesterday, so further maybe in the red. And surprisingly, Delta Corp is deleted from the MSCI small cap indices, so that stock will also be under pressure today. But I guess the biggest gainer in the MSCI rebalance is Page indices, which is shifted from the small cap to the large cap index.
Oh yes, about time. And looking very natty, Nimesh. You're looking like a politician, actually. Well, Sonia, get back to the stock that has been a pain point, Jet Airways.
Yes, I expect more pressure there. Of course, they've had a series of queries that they've answered last evening. But, you know, the pain still continues. So I'm just going to put the clarifications out on board. Jet says that they're seeking lenders, or rather the management has sought more time from the audit committee to finalize their accounts. They say that all the news reports of them planning a $400 million stake sale is speculative in nature. The auditors are not quitting as of now. That news flow that, you know, the Jet auditors, BSR and company may quit is factually incorrect. They've not defaulted on any loan obligations as of now. They continue to be a standard account with banks, and lenders have issued certificates of payments at regular intervals. So a slew of clarifications coming through, but that doesn't mean that the bad news is out of the way. This morning, there are reports suggesting that Jet is seeking lenders' help in a bid to avoid the default. They want to waive off some of their loan covenant as well.
I don't know, after the way IDBI Banks was treated, how many people will have the courage to lend to a difficult airline, because you know, on hindsight somebody will say that you did it for bribe. Yeah. So I don't know, I think the banking sector will be very wary of this. But you want to recap?
Yes, let's do a quick recap and tell you how the stocks are going to shape up this morning. Stocks with positive news flow are names like GAIL, Tata Steel, Oil India, Tata Chemicals, Nifty Bank, SBI, NBFCs like DHFL, Bajaj Finance, Indiabulls Housing, Shriram Transport, Apex Frozen Foods, Lemon Tree Hotels and Vakrangi. While stocks that have some negative news flow going this morning, Cadilla, Repco Home, Ashoka Buildcon, Delta Corp and Jet Airways.
Okay, well, there are a couple of more stocks that you should have on your radar. They're news, but not a red or green kind of stock. This is a CNBC TV18 exclusive. We learned from sources that the government is considering listing ONGC on an overseas exchange, maybe Singapore or London. The move will grant the government better access to funds, as well as give it a better global reach, give ONGC a better global reach. Anshu Sharma filed this report.
That's right. We understand from government sources that government is mulling listing of ONGC in a global stock exchange. We understand that global exchange could be Singapore Stock Exchange or London Stock Exchange, where ONGC listing could happen. The idea is to basically better access of funds, better and cheap access of fund, and global reach of ONGC across the world. Remember, there are a lot of M&A activities which happen both in upstream and downstream companies globally, and in 17-18 budget, FM Arun Jaitley had said that India needs an oil giant which could compete globally. So this idea could be to make ONGC a global company which could compete in the mergers and acquisition globally, like BP and Shell, which operates globally. We also understand that the last week, Prime Minister had a meeting with the energy and mining sector government officials with regards to target, and that's when the idea of ONGC listing abroad was discussed. Remember, ONGC is the largest exploration and production company in India and has some 41 projects globally via ONGC Videsh. We reached out to ONGC for a comment, and ONGC has replied that they would not like to comment on the story.
Okay, they wouldn't like to comment, but a foreign listing perhaps, that's very interesting. Let's move on. Bhushan Power is in focus. All three bidders will be submitting their final bids by today. Ritu's here to tell us more on that. Ritu.
That's right. We understand from sources that all the three players in the fray for Bhushan Power, that is Tata Steel, JSW Steel, as well as Liberty House, will be submitting their final bids by the end of today. Do remember the last time around, Tata Steel had challenged the Committee of Creditors asking for revised bids for the company and had moved both the NCLAT and the Supreme Court in this. That matter is currently still being heard, but the NCLAT had directed that the lenders can call for revised bids and had in fact given a deadline of 13th August to submit those bids. Now we understand from sources that all of these three players, that is JSW Steel, Tata Steel as well as Liberty House, have indicated to the insolvency professional of Bhushan Power that they will be submitting their revised offers by the end of today. Remember, as we had reported earlier, so far the highest bidder is Liberty House at 18,500 crore rupees, but the lenders are not really satisfied with the lack of source of funds that the company has not really been able to show. The second on the list is JSW Steel, which had revised its offer from 11,000 crore rupees to now 18,000 crore rupees, which is 1,000 crore rupees higher than what the Tatas had offered at about 17,000 crore rupees. So today is when the final bids will be submitted, and we understand that the Committee of Creditors will be opening these final bids tomorrow, and the race is really between JSW Steel and Tata Steel. They've emerged as the clear favourites, and we also understand that State Bank of India will be providing funding support to JSW Steel for this acquisition.
Okay, Ritu, thanks a lot for that. That, of course, is going to be an interesting point because today Tata Steel is going to react to numbers, but the big question is, will this issue overpower that? Ritesh Shah of Investec now joins us on the phone line. Ritesh, good morning. Your thoughts, of course, on the numbers and on this news flow about Bhushan. You think that could have a bit of a play today?
Right. First on numbers, if you look at the company reported all-round beat for all its geographies, be it India, Southeast Asia or Europe. So it was a good performance on expected lines, and it also shows the strength in the ferrous cycle that we are looking at. Secondly, to answer your question on Bhushan Power, I think valuations is something that one needs to keep an eye on. If we go by the last submitted bids of 18,000 crores by JSW and Tata, it would effectively imply like 8 times EV by EBITDA, which is in a bit an expensive proposition. That said, this asset also comes with a growth optionality wherein you can add incremental steel capacities. That said, one needs to know what is the timeline to exercise this growth optionality. So if one looks at on an EV by EBITDA basis, these expensive valuations actually wouldn't bode well as far as the street is concerned.
You mean 18,000 crore is too expensive? What is the number that you would say is too bad?
Typically, steel companies trade at 6.5 times EV by EBITDA. So if it is around 18,000 crores, it's good. But specific to Bhushan Power, what we are made to understand is there is incremental capex required to the extent of 7,000 to 8,000 crores from a working capital perspective. So if one adds both these variables together, it comes to nearly 25,000 crores. 25,000 crores on 3,000 crores of EBITDA, it definitely makes an expensive proposition.
Okay. Ritesh, hi, good morning. I wanted to talk a little more about the numbers because this time the European EBITDA per ton at $102 was much better than expectations. Of course, there were some tailwinds this time, like, a weaker pound and the euro, etc. They had some lower operational costs. Do you think this $100 or $100 plus is something that's sustainable in the quarters to come, and what are you forecasting?
We are looking at around $75 for the full year, so we are definitely building in some cushion in our estimates. But looking at the strength in the cycle, can this number sustain for the next quarter? The answer is yes. There's also an element of seasonality which is built in this quarter's numbers. This quarter is typically strong for Tata Steel, and that's the reason why you're seeing $100 plus at the operational level.
Okay. What's your price target now?
We are looking at 730 rupees per share, and this excludes Bhushan Power. What we are also highlighting in the note is if Bhushan Power comes through, it will knock our target price down by 36 rupees per share, given it could be an expensive transaction. And importantly, what we are highlighting is there could be risk on the multiples for the company because we are looking at a balance sheet which currently is like 1,03,000 crores, and with Bhushan Power, it could go upwards of 1,20,000 crores. So it's good to play the cycle, but one also needs to be cautious on the balance sheet size.
Okay, thank you very much, Ritesh, for joining us and putting those risks on the table. Investors will always have that chorus hangover on their head.
Exactly.
So such a big purchase, is Tata buying this at the peak of the steel cycle? Yes. Is a question they want to ask.
I think excellently put by Ritesh, because we obviously perhaps are still not at the peak of the cycle. We are somewhere in the middle. The stock price has already shown the way it's fallen, but from the lows it's recovered as well. Now this will be a bit of an overhang. And whether for right or wrong, last time Tata Steel went for a big aggressive acquisition. That was right at the end of the cycle. So.
Yeah, I agree. But you know, it is only big promoters who will have a vision beyond the immediate. Obviously, analysts' job is to look at the next EPS number. But visionary promoters would look beyond. So now I don't know who's right.
But I can understand
the near-term guy or the long-term
I can understand where the skepticism comes from, because a lot of the Tata Group acquisitions in the past have not worked as well as one would have expected. I mean, look at Jaguar, Land Rover, for example.
I think fundamentally the banks let them down. I mean, they were the highest bid. To call for a second bid was fundamentally unfair. I think banks have they've realized that, you know, you can get the moon for steel. And I would think that was extremely unhealthy on the part of the banks. First bid should have been the last bid, and they should have gone with it. Now you are going to stretch someone, and afterwards the burden again will fall on the banks. This was an uncalled for enticement.
Okay, let's see how the stock shapes up. As Investec was telling us, because of the acquisition of Bhushan Power and Steel, it could knock off about 36 rupees per share on Tata Steel. But let's do one thing. Let's take a short break. As we do that, we'll leave you with some thoughts from TV Narendran, the MD and CEO of Tata Steel. We'll return with our technical experts and tell you how to approach the trading day.
We continue to progress on our strategy of expanding our footprint in India. Our Kalinganagar phase 2 expansion is progressing well, with work already started on the cold rolling mill complex, which will help in enriching our product mix and optimizing cash flows. The other milestone in our growth plans is the acquisition of Bhushan Steel during the quarter. I'm very happy to say that the integration process is proceeding well, and all key stakeholders have been very supportive. We are confident that this asset will add significant value to our portfolio. On June 30th, we also signed the binding agreements with ThyssenKrupp to form a 50-50 joint venture in Europe, and we are now working to secure all the relevant regulatory approvals, and we expect to complete the JV formation by the end of this financial year. The international steel prices did soften a bit in the midst of the ongoing trade frictions, and also correlated with the softness in the raw material prices. So the spreads remained resilient, and it reflected the strong underlying demand. On increasing tariff actions, elevated oil prices and weakening currencies, there are some key risks which we continue to watch out for. And coming to India, the domestic prices have remained buoyant, driven by accelerated economic activities. And despite what is a seasonally weaker period, India's turned a net importer, as strong domestic prices led to lower exports, while trade actions resulted in higher imports.